Sikshayati, platform for eminent authors, engaging teachers, successful students. To know more, email. Payment of deceased partners share. X, Y and Z are partners in the firm sharing profit and loss in the ratio of 4:3:2 respectively. The balance sheet of XYZ on 31st December 2016 was liabilities, creditors 3,000, capital X is 15,000, Y 12,000 and Z 10,000. So total liability side is 40,000. Assets cash 2,000, debtors 10,000, stock 3,000, X loan is 5,000, freehold property 20,000, total asset side is 40,000. X died on 1st January 2016. Firm had a joint life policy of 18,000. Its money was realized on 1st February. Goodwill is to be valued at 2 years purchase of average 3 years profit. The amount of capital and goodwill due to the deceased partner was paid on 1st March. This deficiency of cash was made good by taking loan from the bank. The profits in the year 13, 14 and 15 were 7,000, 9,000 and 11,000 respectively. Prepare capital accounts of the partners and balance sheet of Y and Z after payment to the executors of X. Value of goodwill 3 years average profit is equal to 7,000 plus 9,000 plus 11,000 by 3 is equal to 9,000. So value of goodwill is equal to 2 into 9,000 is equal to 18,000. Calculation of bank loan to be raised, amount that would be amount to be paid to executor, that is 15,000 plus 8,000 plus 8,000 minus 5,000 minus 2,000 opening cash in hand minus 18,000 joint life policy. So that comes to this to 6,000, which is to be paid, which is for which the bank loan is to be raised to make payment. Accounting entries when only deceased partner share of goodwill raised in the books. The entry would be 1st February 2016 bank account debit 18,000 to joint life policy 18,000. The joint life policy money realized on death of X. Next entry 1st February 2016 joint life policy, that 18,000 is transferred to X capital account 8,000, Y's capital account 6,000, Z's capital account 4,000 in the old profit sharing ratio. So X gets 18,000 into 4 by 9, that is 8,000. Y gets 18,000 into 3 by 9 is equal to 6,000, and Z gets 18,000 into 2 by 9 is equal to 4,000. Next entry on 1st February, the goodwill account of X capital, X share, that is 8,000 is transferred to his capital account. The next entry on 1st March would be X capital account 5,000 is transferred to X loan account. The partners capital accounts shows in the credit side the opening balances of each partner, X 15,000, Y 12,000, Z 10,000. Then by joint life policy account, the amount credited to X 8,000, Y 6,000 and Z 4,000, and by goodwill account credited to X capital account is 8,000. In the debit side, X loan account is 5,000. The amount transferred to balance amount over the what is paid to executor is transferred to X loan account. Then X 26,000, that is amount paid to X executor, and then the balance of Y and Z 18,000 and 14,000 lying in their capital account is carried. Now we can see the balance sheet as on 1st March 2016. The liabilities, the goodwill is 8,000, freehold property as it was 20,000, stock was 3,000 and sundry debtors was 10,000. In the liability side, creditors 3,000, bank loan is 6,000 for payment to executor, and partners capital account Y 18,000 and Z 14,000, so 32,000. When full value of goodwill is raised in the books, so the entry would be 1st February 2016, 18,000 debit to joint life bank account, 18,000 debit to joint life policy account, 18,000. The joint life policy money realized on death of X on that day, that this would be transferred to the respective capital account. So 18,000 would be given, credit would be given to X capital account 8,000, Y's capital account 6,000 and Z's capital account 4,000 in the old profit sharing ratio. So X gets 18,000 into 4 by 9 8,000, Y gets 18,000 into 3 by 9 6,000 and Z gets 18,000 into 2 by 9 equal to 4,000. Next entry on 1st February would be the goodwill account is created in full value, so that would be credited to X, Y and Z at 8,000, 6,000, 4,000. And then X capital account is transferred to his X loan account. So the entry would be X capital account debit 5,000 to X loan account 5,000. Now you can see partners capital account. So in the partners capital account, credit side is the respective balance brought forward 15,000, 12,000 and 10,000 to X, Y and Z. By joint life policy, the account is credited to the amount credited to their account is 8,000, 6,000 and 4,000 respectively, and by goodwill account they get 8,000, 6,000 and 4,000. In the debit side, X loan is to X account, X loan is 5,000. To X account, the X executed is paid 26,000. So the balance is Y 24,000 and Z 18,000, which is carried to their capital account. So we get balance sheet as on 1st March 2016. The asset side is goodwill 18,000, freehold property 20,000, stock is 3,000 and sundry debtors is 10,000, so 51,000. In this case, the goodwill value, full value is shown in the balance sheet in asset side. In the liability side, creditor 3,000, bank loan 6,000 and partners capital is now stands to 24,000 and 18,000 considering the full value of goodwill. Thank you for watching the video. Kindly write your comments. Click on the red subscribe button at the bottom of the video to get more details and free ebook. Email us.